And welcome everyone to the October Investment Outlook. Thank you once again for taking some time out of your busy schedule to join us today. And to our friends in Singapore, Asia Pacific, and the Middle East, a very good afternoon and evening. To our friends dialing in from Switzerland and Europe, a very good morning to you. The theme for today's call, as you would always expect from us as we have this conversation, is what can we expect from crypto as we step into the final quarter of the year. As always, we have Katalin Tischhauser, Sygnum's Head of Investment Research here to share with us her thoughts and perspectives. And before we proceed, as always, a gentle reminder to our audience that all content and opinions presented in this live stream do not constitute investment advice. All right? With that out of the way, let's get going. So as we get closer to the end of the year, we're seeing some developments that could impact the crypto market. First, it's been a pumped up past couple of weeks with the US and China, two of the largest economies and engines of the world, injecting liquidity into the financial markets. And then, in the meantime, we turn to November's key event, the US presidential elections. And we also note that the Harris campaign has suddenly taken on a clearer stance on crypto. Worth noting particularly, there's this decentralized prediction market platform called Polymarket, which is already beginning to take bets on who's going to win, right? So, very nicely fitting into the whole decentralized theme and developments taking place on a global basis. And the third observation that's also happening is that, of course, we now see a new Solana trend unfolding with global financial giants choosing it for their services. So let's take a dive now straight away and tackle the first big gorilla in the room, the backdrop to the financial markets. So Katalin, we've made it through Q3, which has been a bit tumultuous, so to speak, and now we're in the final lap of 2004. Time does indeed fly when we're having fun, yeah. So let's start again, as I mentioned, with the elephant in the room, lurking at the top of many investors' minds. The US proceeded with a 50 bips cut on September 18th. While a couple of weeks ago, or for that matter, even last week, China, on the other hand, recently launched a major stimulus package. To your mind, does this mean for the financial markets?
Yeah, indeed. And the first point actually that I would like to make on this is that expanding global liquidity has been probably the strongest driver. In fact, I would say clearly the strongest driver of bull markets in recent times. And I don't just mean the crypto market, I mean financial markets in general, and especially since 2008, the financial crisis. Basically, asset prices are increasingly shaped by what previously would have been termed unconventional central bank policies that basically directly affect liquidity conditions. And these have actually increasingly become the dominant force in moving asset prices. There's actually this cliche term now, I don't remember who said it first, but that central banks are the only game in town, or central banks have become the only game in town. And global liquidity has been rising recently. Actually, financial conditions have been getting looser for the last year and a half. So actually, it is not surprising that risk assets have been making all-time high after all-time high. And more recently, obviously, pricing in the expected start of the US rate cut cycle and so on. But financial conditions over this period have actually already been getting looser. And now, as you mentioned, these examples in September, basically the liquidity cycle just got a major boost. There's the US rate cut cycle that kicked off with the 50 basis point cut. There's the China stimulus package. Now the market is debating how much more is there to come, and will that be less than what the market would like? But definitely China is injecting liquidity. And actually, September was the biggest month for rate cuts since the COVID month, since March 2020. There were 21 central bank rate cuts in September. So it's a global liquidity cycle, and that's positive for financial assets. Now, having said that, there is nervousness occasionally around, maybe an occasional bad, worrying macro print. we have seen that at the beginning of August or occasionally when one of the macro indicators, of which there are many, signals something that's slightly worrying the market. But I would say that economic data on the whole out of the US certainly suggests that the Fed has found this balance of basically keeping growth quite healthy. The FOMC members forecast kind of 2% or above, and unemployment tweaked to a level where it appears to keep inflation in check. Now the SAM rule has been jettisoned. That was previously this metric that if unemployment rises beyond a certain point, that signals recession. Now the received wisdom is that basically there is a new balance between keeping inflation in check and growth going, and that requires somewhat higher unemployment than previously. But basically, I think the Fed has been managing the situation well. The market concluded the Fed is ahead of the curve, not behind the curve, and I think it does seem that way. And there is of course this trajectory of escalating unpayable debt, huge government deficits, government funds increasingly spent on unproductive uses, right? Like interest payments, for one. And this is not sustainable in the long run. But for now, the Fed appears well in control, and basically they're successful in, what they say, kicking the can down the road. I actually, certainly over the coming months, I don't see the major risk coming from the Fed losing control. I would say the major risk appears currently some geopolitical situation spiraling out of control. And what would be the most negative for financial markets would be something happening in the Middle East that would affect the oil price very significantly. And for now, I certainly don't want to predict or speculate on future geopolitical events, but what we can see is that the oil market is pretty relaxed for now. Basically, the oil price was a year ago about $90, then down to $65, and recently on escalation up to $77, and then back down to $74. So definitely no crisis scenario is priced in the oil markets. And barring a geopolitical disaster, I would say that the macro picture looks very positive for financial assets, and increased liquidity is likely to continue lifting asset prices.
And indeed, Katalin, I mean, I think we all agree that, if anything that's constant among us is the desire not to have any more violence and wars, if you will. But I mean, as you say, right, the black swan is always in the geopolitical scene. Moving on to perhaps an area or a space where we were a bit more, more clarity, if you will. So we go back to this favorable environment now that we see for financial assets. And as you said, right, in the US, your strong labor markets, if you will, and then of course your jobless claims are also beginning to tither, so to speak. So the conversation on Wall Street, on the other hand, has become taken a shift away from soft landing to some even saying no landing, right? So it's quite interesting how literature in the financial world sort of changes very very poetically, so to speak. I'm just wondering from your point of view, right, where we center in on the areas that we're familiar with. Does this uptick in the financial markets, also extend to the crypto market, right? I'm sure you'll agree with me, Katalin, that the crypto market has been quiet over the last couple of months. So, what does it mean going forth?
Yeah, I would say these conditions are especially good for the crypto market. And I would expect the crypto market to outperform in this cycle. And there are a host of reasons for this. One is what you already mentioned, that Bitcoin and crypto has been underperforming for the last 6 months. So as other assets priced in the increased global liquidity, the impending start of the rate cut cycle, and so on, the crypto market has not. So there is catch up to do. Secondly, the key reason for the crypto market's underperformance was unexpected large supply basically coming to the crypto market. It's a small market, so when there's unexpected or especially large demand or especially large supply, it has a strong impact on price action. And obviously there was a lot of supply from government, the German government, most importantly from bankruptcy states distributing in kind. Now, this is largely behind us. The market has absorbed it. Thirdly, there have been actually a number of positive developments in the crypto market over the last 6 months. A number of things have been moving in a positive direction that are specific to the crypto market, idiosyncratic developments, and these have not been priced in the market conditions of the past 6 months. So there's even more catch up to do there. And generally, rate cuts support non-yielding assets like gold or Bitcoin, and of course the demand for safe haven assets, which Bitcoin is increasingly regarded as, is generally increasing in the current environment. We have seen gold also making all-time high after all-time high.
Right. So all-time high after all-time highs, right? I mean that's a nice rhyme to it, if you will. So Katalin, and if you were to take into account the seasonality effect, right? I mean, in the traditional world, we've seen this kind of studies done all the time, right? What part of the year, what time of the year, what part of the quarter, so to speak, and behavioral, right? Is it summer, a lull, or is it October, September fear, so on and so forth. So with Q4 traditionally being a good time for Bitcoin, some are predicting a significant rebound already. So, the sky's the limit, right? As with all things. What are your thoughts here, right, on what we might see as the year comes to a close?
Well, as you say, the crypto market, other markets as well, but the crypto market has exhibited very strong seasonality historically, with average Q4 performance dwarfing the other quarters. Really dwarfing. So that's been the history. And also, interestingly, September is usually a negative month in crypto. But in the years when September was positive, which it was this year, in those years, historically, all the remaining months of the year were positive every single time in the past. Now, of course, there is no guarantee that history repeats, but in the context of what we have been talking about before, the crypto market has a lot of tailwinds as we head towards the end of the year.
Okay, well, right. That's good to know. I think that in a nutshell, I think that's really encouraging, not just for the individual investor, but also for institutions, right? So, this whole year to date, 2024 has been a bit of a revelation, if you will, especially we started off with the ETFs launch, and institutions gradually coming into play. We did our future finance survey at the start of the year, and we also saw a desire and an intent by institutional investors to want to participate and adopt Bitcoin or blockchain, if you will. So various commentators of late have expressed optimism, especially for Bitcoin. So on the back of increasing institutional inflows, right? And a few weeks ago, right, BlackRock referred to Bitcoin ETFs as a unique diversifier in one of his latest reports, and making the case that Bitcoin is an effective portfolio diversifier. And most recently, last week actually, Nasdaq announced that the SEC had approved its offering of spot Bitcoin ETF options, trading on the back of the BlackRock iShare Bitcoin Trust. So, that growing pool of analysts and industry experts are now beginning to say that, this could be a monumental development for the crypto community. And, with some already discussing the potential even for a spot Ethereum ETF options. But, again, as with all things, there's always that initial zest, if you will, and question then becomes, are such views being warranted, Katalin?
Well, you mentioned the BlackRock report, and I think that report in itself can be quite influential. And the report basically makes some very strong points in favor of Bitcoin, calls it the inverse of risk assets, says it's an alternative reserve asset as concerns over the US national debt rise. And these are points, and that it's uncorrelated and so on and so forth. These are points the crypto market has been making for a long time. We have been making these points for a long time. But this coming from a powerful traditional financial institution such as BlackRock, I think can be very influential. And we understand that many large traditional financial institutions, even some of very significant size, have been considering allocations to the Bitcoin ETFs, going through internal processes. And I think in this regard, narrative support from an influential institution like BlackRock can be very, very helpful. And also, of course, the plentiful liquidity and expanding liquidity conditions that we're experiencing, I think this can facilitate and accelerate these allocations, as can what you mentioned, the Bitcoin ETF options. Obviously, that makes the product more attractive for institutions. They can hedge the exposure, they can express asymmetric views, and that just makes the product more usable and safer to use. So it can be very helpful in unlocking demand from larger institutions, I think. And let's not forget that Bitcoin's liquid supply is highly constrained. So we saw that in March, that when there's a spurt of demand, it creates a demand shock very quickly. So we could very easily see that between now and year end.
Wonderful. Thanks, Katalin. So now let's take a slight tilt away and pivot towards the, a common theme, that we've been discussing in the past, but I think will continue to be touched on until we step into November. And, it's just, 30 odd days away, right, to the big event. So, in our previous live streams, we've discussed Kamala Harris's relatively quiet stance, right? So, just, keeping it quiet, if very neutral on crypto compared to the opponent's rather vocal support, yeah? So, however, I think at the donor event in September, Harris actually signaled her support for the expansion of crypto in the US. If I could quote, right, a report that said that, in her words, we will encourage innovative technologies like AI and digital assets while protecting consumers and investors. I am, particularly encouraged that, there's that nice balance of wanting to push ahead, but at the same time thinking of protection. So I think that for me, it's a very nice balance. But I am just wondering on your end, do you think such a comment by her, allows us to read a bit more into the tea leaves, or it's a bit too soon as well?
To be honest, what we have been saying for some time is that a US political shift has visibly been happening for a while now, especially very, very visibly since May. And this is already under the current administration. So I want to make that point again before talking about the Harris campaign, that I think this shift is already happening right now, and crypto has increasingly become already a non-partisan issue. Not entirely, but increasingly. And we have seen bipartisan support for various bills. We have seen prominent Democrats like Chuck Schumer coming out in favor of crypto, the SEC ending several investigations, and they even backtracked on the crypto assets are securities to in a filing in the Binance case recently. There are statements from the SEC that are actually very encouraging. Basically, they say they regret any confusion they caused by using this term, crypto asset securities. They're actually, by using this term, they're not referring to the crypto asset itself as a security. It's just a shorthand term they use, but they will no longer use it. So I think these are encouraging signs, irrespective of campaign rhetoric and election outcome. This is already happening. And I think this positive trajectory is already set. But clearly the rhetoric is very different from the Republicans and from the Democrats, but it has to be. There is still a remaining constituency among the Democrats that are staunch crypto critics, let's say. And basically in the run-up to the election, the Harris campaign cannot alienate this group and this constituency. So they're constrained by that in terms of their rhetoric. But the fact that they did come out, they did say pro-crypto things, and I think they're walking this tight line, I think, actually very skillfully with the crypto rhetoric, because basically they're not alienating any constituencies, just pledging pragmatic support for a growth industry and emphasizing what you also mentioned, that they want to make sure they curtail bad practices.
Exactly. I think if there's anything that's consistent between us and maybe even the masses, at least, is that the need for protection is going to be there. Yeah. So I mean, again, something to look forward to.
Agrees, right? Most
Yeah,
of
no, I
the
mean in every part, right, of the globe where it's happening. So Singapore, particularly, Asia, I think it's all the jurisdictions are coming together to see what they can do. So it's a good sign. Yep. So I think we are close to the half hour, but in any case, let's try and squeeze in one more topic, and see how we can expand and bring this chat to a nice close. So let's take a deeper look, right, Katalin, at the token itself, right? So one of the big events, or rather the big developments of late, has been this adoption of Solana by the financial giants, right? So, we are seeing a growing interest from traditional financial institutions in the use of Solana. So, for instance, a few months ago, we saw PayPal adding Solana for stablecoin processing, and then Visa, the card company, has also recently included it for USD coin settlements. Franklin Templeton, the fund house, announced plans to launch a mutual fund on Solana, while Citibank is exploring capabilities for smart contracts and cross-border money transfers via a Solana implementation. So, with all these developments, you can imagine the word on the ground, if you will, anecdotally, right? All these speculation or views that Solana might soon overtake Ethereum and so on. What, in your view, is such an impact going to be looking like if indeed this comes true?
Yes, I agree that that these developments, these collaborations between Solana and TradFi are something to really watch, and it's in the context of very positive trends for Solana. Tremendous growth in terms of revenues, transaction volumes, market share. Actually, the market share has overtaken all other blockchains bar Ethereum recently. So there's a lot that's been going right for Solana. These trends are continuing for now, pretty much. And there's all sorts of other positive drivers. The far denser new client that's going to increase scalability even more exponentially, and so on. And they're bringing the new version of the Solana phone, a Solana games console. There's just a lot of positive trends going on with Solana. And as you say, people are now talking about Solana's going to challenge Ethereum's leading position, especially as the sentiment around Ethereum has been really, really negative for some time, and it still is. So there's talk of that. And I would actually point out that that's maybe getting a bit ahead of ourselves. The gap between Solana and Ethereum is still huge, especially if we compare the entire Ethereum ecosystem, including the layer 2s, because that's how Ethereum scales versus Solana integrated scaling. If we compare the market shares and even growth trends, the gap is still, there is still a huge gap there. Also, to be fair, some of Solana's stated metrics are overstated. So we have to be a little bit careful. Obviously, revenues are revenues. There's no question there, but certain kind of transaction volume metrics are somewhat overstated and not exactly comparable to other chains. And also a lot of its transactions and revenues actually overwhelmingly come from meme coin trading and issuance. And that's a vulnerable sector. It lacks fundamental value. It lacks economic merit. So it's a vulnerable sector to have as over 90% of the activity on your chain. So that there are all these things. While Ethereum is very well diversified, everything has been building on Ethereum for a long time. They're not so vulnerable in terms of one given sector, especially as sort of maybe not the most meritful sector. But coming back to what you said at the beginning and your question, these developments that we have seen of TradFi actually aligning with Solana, and some of them even made statements that they prefer Solana to Ethereum. They think Solana will be better for payments. And if that does happen, that TradFi mostly chooses Solana over Ethereum, not in addition to Ethereum, but chooses Solana over Ethereum as these trends that will likely involve TradFi and will be a strong driver. Real world asset tokenization, stablecoin payments, these are trends that we expect to take off over the coming months and years. If TradFi really does go with Solana and prefers it over Ethereum, that could shift the balance. That could really turn the picture. So I think it's something really to watch.
Thanks for that, Katalin. I mean, it's a very, very balanced view, but in that spirit of being balanced, if you will. So let's close off this discussion as we reach the top of the hour. In your mind, at least, right? Given Ethereum's a rather slow behavior year to date, and maybe recently, is therefore the story for Ethereum slowly drying up, or to your point as well, it's just a case of adoption and really it's a utility scenario that's coming to play, and it's just about a gradual maturity of the entire sector, if you will.
Yeah, I mean, there's a lot to say about Ethereum, and when sentiment is extremely negative, it's usually vulnerable to upside shocks. So I would point that out, and vice versa when sentiment is really frothy. As I mean, Solana sentiment has been very positive for quite a long time. So it's much easier from that point to have a disappointment relative to expectations than vice versa. And Ethereum is in the opposite position, but it will need a catalyst. And we haven't seen one. I mean, revenue started picking up again in September. Their scaling strategy, I think, is solid. Obviously, it's been in this lower transaction volume environment. It's been cannibalistic of Ethereum transactions on the main chain. But the view always was that in the long run, it will be the opposite, that basically it facilitates transactions that were previously simply not possible. And some of this, of course, they have to settle on the layer 2 have to settle on the main chain, so that it basically unlocks incremental growth in that way for Ethereum. And there could be other catalysts as well. The ETFs have done, of course, very poorly in terms of inflows, but that possibly could just be a matter of time. Just institutions are still grappling with Bitcoin, so just give them some more time before they get around to looking at Ethereum. So Ethereum is a great project. They're constantly upgrading. They're doing it in a very high quality, thoughtful manner, and they still have an overwhelming market share. So I would, even though there isn't an immediate catalyst that's obvious, I think the risks are, after so much negative sentiment, maybe more to the upside at this point.
Lovely, wonderful. Thanks so much, Katalin. I think it's a very nice close to our conversation today. To remind ourselves that, right, it's always just not to just take what's happening at the top, but to always go below the hood and make sure we understand exactly what is it that we are looking for, be it coins, be it even other asset classes per se. So thank you, Katalin, for unpacking the details today as we step into October, as we step into the final quarter of 2024. And thank you, everyone, for dialing in and spending your time with us. For a deep dive into our conversation today and other topics driving the crypto markets, please do download the October Investment Outlook. Visit our Sygnum website, go on to the Learn section, and click on Research and Education. That's where you see the drop-down and the availability of all our thought pieces, latest views, nuggets, per se, that will keep you updated on the current developments in the crypto world. And also, please, yes, do join us on our community on LinkedIn and stay up to date with our views, our launches, our research pieces. And on that note, here's wishing everyone a good day, good afternoon, and good evening as we sign off. This is Sygnum.